Hello everybody and welcome to Commsave Educates. Today's webinar is all about the subject of understanding your credit report. My name's James Richards, I'm the Strategic Partnership Manager here at Commsave and I'm going to be talking you through this important subject. So, what is a credit report? Well, a credit report gives you a detailed summary of your credit history and your financial behaviour. It reflects how you've managed credit that you've had in the past and any current borrowing that you have. It's generated by one of three credit reference agencies, Equifax, Experian and TransUnion. We'll be having a look at those in a bit more detail. And there are lots of misunderstandings and myths around credit unions. This is one of the key reasons we wanted to run this webinar, just to help you understand some of the issues around credit reports and separate fact from fiction. So, firstly, what's on your file? Well, there's personal information like your name, address, your date of birth, your credit accounts that you have, both past and present, and this will include information like when your accounts were opened, your credit limit or the original loan amount, how much you currently owe, and any missed payments on existing or past cards or any loan accounts that you have. It will also have details of any recent credit applications that you've made, as well as public records like if you're on the electoral roll or if you've had a county court judgment. It's also important to understand what's not on your file. There's a lot of myths and misunderstandings around this in particular. So firstly, the amount of money in your current account or any savings account that you have, that detail is not on your credit file. Your file also doesn't include information like your salary, student loans, criminal record, parking or driving fines, or council tax arrears. Looking next at credit scores. Again, this is something that is quite difficult to understand. There's lots of different ways, different contributing factors to your score and what impacts it. And really, first thing is I would say there's no such thing as a single universal score. Different credit reference agencies all calculate your score in a different way. The score is an indication of your credit worthiness. It's how likely you are to repay your debts on time. And one of the key factors that lenders will use when they're assessing your loan applications. They will also take into account factors like affordability and any record that you have with that lender, but it will affect things like how much you can borrow and at what interest rate. Put simply, the higher your score, the better your chance of obtaining credit. You've got a better chance of being accepted for things like a mortgage, a credit card or a loan, and it's easier to take out certain types of contract like a mobile phone, post-pay utilities or car finance. I mentioned that there are three main credit reference agencies. We're going to have a look at each of those now, starting with Equifax. Equifax generate a score out of 1,000. You can see there from the slide the different score ranges that they have. And there is a free app called ClearScore, which enables you to register an account, provide some basic details, and it will pull your credit file for you so that you can see what information Equifax holds on you. The second CRA is TransUnion. This is formerly known as Call Credit. They have a different scoring range. They score out of 710. And again, you can see from the slide deck the different scoring ranges that they use. And similar to ClearScore with Equifax, you can use an app called Credit Karma to track your TransUnion credit report and see what's on there. The third credit reference agency is Experian, and again they have a different scoring range. Their range recently changed at the end of 2025, so if you previously accessed your report through Experian, you might notice a different score now when you log in. The scoring range runs up to 1,250. Both the website and the app for Experian will give you access to your score, but in order to access your full report, you'll need to pay a fee of £14.99 a month. Experian offers something called Experian Boost, which helps to increase your score through sharing information on regular payments that you might make. Things like your council tax bill, your Netflix subscription, all of those things, when you put them through Experian Boost, can help to increase your score. They're also offering information to customers who are in the low scoring band as to how they can improve their score, what steps you can take. So if you do fall within that range, it's well worth taking a look at the information on their site. There is a service called Check My File, which enables you to see all of your credit scores in one place. There is a free trial for 30 days, so if you just want to log in once and check the current information that's held on you, you can use the free trial to do that. After the trial, it renews at £14.99 a month. It's important to understand that most major providers will use a combination of the CRAs, Most providers amongst the mainstream banks will use all three, but there are organisations like Co-op and Santander that only use Experian. There's also an issue, and we see this quite a lot at Commsave, where our members often have quite thin files, as we might describe them, where there's simply not much information available. This can make it hard for lenders to verify your identity and also to understand how likely you are to repay credit. And that can cause problems in terms of access to credit in the same way that having a poor credit report does. So even if you might not have had much credit in the past, it can still be a barrier, even though you've done nothing wrong. We'll talk a little bit about that and what you can do about that a little later in the podcast. So what helps your score? Well, the first thing, and it stands to reason, I guess, is keeping up your regular repayments. Maintaining a strong repayment record is key to getting a good credit score. If you're struggling to make repayments, reach out to your creditors. Don't just miss payments, as this can have a really negative impact on your score. One other factor that definitely helps is being on the electoral roll, so registering to vote. It's part of stability. It helps lenders to identify you and to have confidence that you are at the address you say you are and that you're settled there. So if you move, do let your local authority know so that they can update your details and you can stay on the electoral register. A third factor is secured loans, such as a mortgage. This again helps to show that you're a responsible borrower because you're putting up collateral against the loan that you've taken out. So on the flip side, what hurts your score? Well, definitely missing payments. That will have a significant negative impact on your score. We would always suggest, if you're struggling, speak to the lender in advance of a payment being due to see how they can help you. Missed repayments will stay on your file for 6 years. So if you can target getting 4 years worth of record without any missed payments, that will definitely have a really positive impact on your score. And lenders will generally pay much less attention to older missed payments. Another factor that will definitely hurt your score is if you've got any searches from debt collectors on there, whether this is from the lender or from a collection agency external to them. These searches stay on your file for 2 years. And similarly, if you've had any defaults, county court judgments, bankruptcies or individual voluntary arrangements, they will stay on your file for 6 years and again have quite a damaging effect on your score. It's important to understand that there are different types of credit search. The first type is called a hard search, and this is what happens when you apply for a loan. It can impact your score, particularly where you have several applications in a relatively short period of time. The opposite of that is a soft search. This is something like when you check your credit report. These don't impact your score, and more lenders are actually enabling you to do a soft search before you submit a full application to them. And this can give you an indication of whether your application is likely to be successful and avoid making applications that you might be unsuccessful with. Another factor to be aware of is financial associations. So if there's anybody that you're financially associated with, this can impact your score. Financial associations are created by things like having a joint mortgage with a partner, being named on utility bills jointly with housemates, acting as a guarantor on a loan. They're not created just by virtue of being married to somebody or sharing an address with somebody. Something else we thought was worth flagging up are issues around buy now, pay later. The handling of buy now, pay later on credit files is somewhat inconsistent at the moment. So regulated schemes like Zilch or Monzo Flex should be visible. Most interest-free buy now, pay later schemes don't report information about your borrowing. Klarna, which is increasingly popular, does report to Experian and TransUnion on any purchases that you've made after the 1st of June 2022. So what can you do to improve your score? Well, some factors to bear in mind are: improving your score is a marathon, not a sprint. It can take time to turn around a credit report that is impaired. It can also take up to 5 weeks for details to be updated on your credit lines because of how different lenders report to the credit reference agencies. But we've got 10 top tips to help you improve your credit score. The first of those is check your report and get any errors corrected. You can use free online tools and mobile apps to check out the information that the credit reference agencies hold on you. You can raise a dispute with the credit reference agency if you think something on there is wrong, and this gives the lender or the other company providing the data a chance to correct the detail. It's usually investigated and resolved within 28 days. If it's not resolved to your satisfaction, you can place what's called a notice of correction on your file. This gives you 200 words to explain why the error is there, and it's something that will be visible to lenders when they're checking your application in the future. It's a really useful way of explaining one-off issues. So if, for example, you've had a bereavement or something that's caused you to miss a payment, that's useful information for a lender to be able to have, and the notice of correction is a great way of getting that on your credit file. Our second tip is to think about any financial associations that you have. We mentioned that you'll be able to see these on your credit report. So are there any that are incorrect or no longer relevant? We would suggest ending any financial associations with ex-partners by closing any joint accounts you share with the associate. That can take several weeks to update, as we said. Removing your name or the associate's name from any joint accounts. And get your name on some bills if you're in a house share situation, so turn this to your advantage. If somebody else in the household is paying the bills but you're contributing to them, you won't be getting recognition for that on your credit file. So let's look to rectify that by creating a financial association. The third tip is try to avoid too many hard searches at any one time. One hard search in a 6-month period shouldn't affect things by more than a few points, but adding several searches in a short space of time will definitely have a negative impact. And this applies to applications for things like credit cards, utilities, mobile phone contracts, loans, car finance and mortgages. Also use soft searches wherever possible. These can give you a really good indication of whether you're likely to be accepted for credit before you make the full application. Tip number 4, don't use credit card cash withdrawals. These can have a notable impact on your score, especially if you make multiple withdrawals in a relatively short space of time. It's an indication to potential lenders that you might be overspending, and it can be an indicator to them of urgent need. Tip number 5 is all about credit utilisation. This is about the amount of any credit limit that you have that you're actually using. A rule of thumb is to try to keep your borrowing to no more than about 25% of your available credit limit. So what does that mean in practice? Well, if you've got a credit card with a £1,000 limit on it, try to keep your usage at any one time to a maximum of £250. This shows borrowers that your lending is controlled, and if you can keep this up for 6 months or more, it will have a positive impact on your score. Tip number 6, we touched on this earlier on. This is about getting yourself on the electoral register. It's an indicator of stability for potential lenders. It's really easy to do. Simply contact your local authority on their website for information on how to do this. It can take a bit of time for the application to be processed by the local authority and for it then to reach your credit file, but will have a positive score once it reaches your file. Tip number 7 is to consider keeping your oldest accounts open. While it can be tempting to close off any unused accounts from the past, one of the factors that will positively impact your score is the age of your oldest accounts. This is particularly the case where you have a really strong history with that lender. Having an available balance that you're not using can also help to reduce your credit utilisation. Tip number 8 is to use your rent payments to your advantage. This can be particularly helpful when you've got a thin credit file. If you're a council or a social housing tenant, you can ask your landlord to report this to the credit reference agency using the rental exchange. Private tenants can also do the same or self-report through Credit Ladder or Canopy. Tip number 9 is to try not to have too many unsecured loans out at any one time. This means you've got a riskier profile for other lenders than if you had secured loans that are guaranteed against some form of collateral. It's worth considering whether a debt consolidation might work for you. This can both help to reduce your monthly outgoings and free up some spare cash for your budget, but it also enables you to show settled accounts on your report, which can help your score. And tip number 10 is to consider using a credit builder card. This can be an option both to improve your score or to establish a score if you have a thin file and you've not borrowed before. It helps to establish a payment record, and it's something that you would look to build up over a 6 to 12 month period before you really expected to see any impact on your credit file. Using such a card for small purchases and paying off the balance also helps to keep your credit utilisation low. However, do be aware that typical interest rates on these cards can be quite high, so the amount you owe can increase if you don't settle your balance each month. Okay, that's all for today's session on credit reports. Thank you very much indeed for joining us. If you've enjoyed the podcast, do like, leave us a comment or subscribe, hit the bell to be notified about future videos, and we'll look forward to seeing you next time.